Hey everybody, DayTraderRockStar here, and this is going to be a special video. We're going to be talking about the micro futures today, S&P micro futures, NASDAQ futures, Russell, Dow. You could apply anything to the techniques that you will learn in a lot of these videos. Also, this is just another one of my thousands of videos that I've put out on educating people. I do a show each and every day that the market since 2007 we've been on the air here at DayTradingRadio.com. 2000. I've been trading full time since '96, and we broadcast live every single day that the market is open from 8 a.m. to 4 p.m. And today, boy, what a day it was! Today is this is the YouTube channel. If you happen to see this through the YouTube channel, make sure you please subscribe, hit that like button, do whatever you can to support the channel. So I want to go and just kind of talk about, the first thing we're going to talk about is just today. Today is, what is today? Today is Friday, and we've just come off of a terrible week in the market, a market that's been selling off very, very hard. It's January 27, 2022. And, all the talk out there has been about a market coming into an area where we're looking for maybe a 10% correction to standard. And if you haven't heard that in a while, it's because we haven't had a 10% correction. But if you look back at the old texts on trading and stuff, old school text, a lot of people used to mention that 10% mark as a good corrective phase in the market, a healthy phase when you get down to that point. Anything below that, typically they start talking bearish markets, and but you know what, the fact is, if you're down at 10% and going into a bearish market, you're probably closer to a bottom than anything. So these things, I wouldn't pay too much attention to the semantics of everything, the terminology. Just understand that the technical levels are very key, and that's what I teach, and we trade off of those. So my goal is to basically get traders up to speed trading the micro contracts. The micro contracts are a good beginning contract to trade if you're not familiar with futures. I'm not going to go into the well, let me tell you, I will be doing a webinar in the next week at one point. I haven't sent out the announcement, but definitely, like I said, sign up to the video so you get the announcement and when that goes out. But basically, that's going to be key. It's going to be a blueprint to get you started trading these micro contracts. And even though I do have, I have a portfolio and I trade stocks, and we trade stocks every day, inside the day we have many opportunities to actually trade futures. And what's great about the futures, our micro futures, that you could actually do this with a much smaller account than you really can trade stocks, because if you're certain, especially here in the U.S. The rules require you to kind of have over 25,000 to be an active and free trader. Otherwise, you fall into the pattern day trading. You can only trade a limited amount of times in a set amount of period. That's three trades in a 5-day period. I believe that's it, right? So that kind of cuts you down to missing opportunities and stuff. So we always have these futures, which you don't have those rules of being applied. You're free to trade in and out of these trades very quickly and whenever you want to, and you don't have to worry about being stuck in them or missing an opportunity. The micro futures also are very cheap. Where sometimes if you wanted to get into the E-mini futures, you could be costing you thousands of dollars in some cases. If you have like a broker like IB or some other brokers, you want to really get yourself a discounted broker for futures. Do I have a couple here that I could just recommend fast for you? It's going to be all part of the It's going to be all part of the webinar next week. Do I have something on that? I don't have anything in front of me that I could tell you offhand. Ninja Trader is a discounted broker for futures, but you're not able to trade stocks or options. Apex is another one. Infinity, I believe, is also another one. So there's three right there. And I'm sure there's other ones out there. Just make sure you can get those contracts for about $50 a contract. $50 you're only putting up. And what I want to do is show you how to make income, daily income, trading just up to 3 contracts and making $100 to $200 a day, just taking a few trades. Very low risk, very high reward, because, like I said, if the other day I was just trading one contract, the market was pretty volatile. One contract, and again, I'm not going to go into the whole thing about that. Basically, you could buy that one contract on margin of $50. The return on this is, I traded one contract about 4 or 5 times during the day, and by the end of the day, I was up $70. So, that's good return. That's a great return on your money. Doesn't mean you're going to do that every day, and that was just with one contract. So you're going to see a lot of great stuff and talking about how to take those trades and how many contracts you're going to want to put on, and when do you put them on, and what you need to have set up. This is just an example of one of the files or one of the screenshots that we're going to go over and stuff. But I also, what I also do? I like to review the trades of the day. So today, kind of going back into today's action, we had a very big sell-off. And I'm just going to show you the S&P cash right now, which is the S&P 500. And for the whole week, basically, we sold off. Monday kind of got that little bounce, and then Tuesday, Wednesday, Thursday, Friday. And look where we ended. We ended right at the 200-period moving average. 200-period moving average, we ended right on that. We're oversold. We're oversold on the 60. We're oversold on the daily. The weekly is starting to get down there, but we're not completely oversold on the weekly yet. The daily 10% corrective zone, which a lot of people, again, I've mentioned this many times. If you've gone into old history books, old trading books, a lot of people mention 10% corrections. Now, that's just something that's out there, just like, it gets printed and somehow they run with it. It doesn't really, it's kind of, what's the word I'm looking for? It's kind of a self-fulfilling prophecy at one point where you get close to it, people are looking at it, and it happens. Well, we haven't had a 10% correction in quite a long time, so a lot of people are focused on us. So that's where we are. If we get that 10% correction, we're going to look for a further pullback, maybe another 50 to 60 points down. And that could easily happen. We were down 81 today in the S&P, I believe, 81. We're close to that. So Monday comes, even Sunday evening when the futures open up at 6 o'clock, it's going to be very exciting next week. So definitely want to tune into Day Trading Radio next week and see us trade this market. Better yet, head over to Day Trading Radio and become a member and get into our chat room. We have great traders in there, and I want to be using these traders. There's so many great traders. We're going to make a team of traders. I was just thinking about this, and I was just writing down some of the names that we're going to be giving some new colors to. Typically, we have active and good traders that eventually get a mark of expertise, and that mark of expertise in the room is being able to post in a certain color, so you're able to see them, and they're able to post their trades. And they usually have, people who request, hey, I want to be able to follow this person more, and so I'll give them a certain color in the room. So we're going to be doing that next week too. And these people in the color, we're going to be working as a team, identifying these levels. That's something I haven't even mentioned to the members yet. This is the first time I'm talking about this, so this is kind of breaking news. So here's the picture of today. And how I typically approach the market. Now, we were looking for a gap down and kind of a bounce after the gap down, and we got that. We got an initial gap down, we sold off hard, and then we kind of reversed and bounced. And it was a pretty significant bounce. It really was. During this whole process, we're looking at the 1 minute time frame on the EMini. Now, the same chart's going to show up on the micro, so MES. So same chart, but I use the EMinis. It's a benchmark index, and everyone knows it, S&P 500. So I just use it to kind of point out the indicators and stuff, and it's just all set up there. Now, this was a nice recognizable channel. We came down, we bounced, pulled back. We started to feel some strength. This was been, again, I always pay attention to the lower stochastic band, and again, this will be covered on the webinar if you're not familiar with some of these indicators. This is one of the more important ones, the 60-10 on the 1 minute time frame, because that represents your 5 minute, your 5 minute chart that you really, instead of switching back and forth or having another 5 minute next to you, you're able to read that 5 minute by using that 60-10 stochastic. So, we had a 5 minute oversold, and once we started getting that breakout, we had this nice rotation up until we got overbought, and then eventually broke back down. And once the selling came in, and that's what's been the key here. The market has been doing this each and for the last 4 or 5 days. Every bounce has been sold into. So this had a nice bounce, and we sold into it. The day before, we had a bounce, and we sold into it, and we closed on the lows, and we closed on the lows again. And we're going to go into next Monday, seeing if we got a gap down or a gap up, and how we're going to play that. I prefer to get a gap down, and then maybe a little rally. But you'll never know. I mean, we could actually get a gap up. There could be some, what could there be? Maybe some news out there that moves the market. It's going to be very, very active next Monday, Tuesday. It's going to be very active. We're very close to our 10% zone. We're right on the 200 period moving average. It's actually a good time to be a trader. All right, so we're going to be focused on this. And I'm just looking at, we had this big run up, and I was off the air today. Paul was on the mic. I was trying to call out some trades on the DTR2 channel, and I posted a few trades, and we had a couple of good ones. Let me see what if I could go back here, and I'm managing my trades. Normally I'm on the air, and I'll be, I do this even though I wasn't on the air. I was making my own charts and stuff, and this is what I do. I just kind of put the roadmap in here and teach about it. So what we're looking at is a lot of weakness. We're holding under the VWAP, underneath the 200. We did get a pop to the 200 once, and a pop to the 200 twice. And then once you had those pivot areas in here, you could actually see that trend line really started to take over. And that really did hold up pretty good until we broke down. Then we had this kind of a new channel line playing out. And this, I think I took a trade here. That was a divergence trade. As you can see, a little better divergence. It was a shallow divergence, but good enough to get in. I got in there, and we got that nice pop, took it right off, and I was happy about that. Market came right back down. And instead of, smoking the hopium and hoping the market went higher, trying to stick to your rules of getting out on the rotation. And that's how I use that. I got out on my first rotation here. That is a rule that you'll see in the webinar. You have to learn this rotation. This is a business. This is a business. You got to be in, recognize the entry. And this entry was also great because it had multiple trend lines. We had this underlying channel line from 1, 2, 3 channel, 4, 5, 6, 7, and we came all the way back down, 8, and then we came all the way back down again to it. But we also had this other channel line that goes way out over here, way out over here for this big channel. So you had all these trend lines converging onto one level, and there was one here. So it was 3, and then we were oversold, and we had a minor divergence, and we got a big wicked pop on that. Took profits, came back down. We started to see a 5-minute divergence here. It started to give us a nice little 5-minute divergence, and we made another run up here. And I did take this trade too. Posted that in the room. So we're actually looking to see if we could get up to 420 on this move. 420. And sure enough, we got up right up under 420 and then reversed over. So took a couple trades on this. They worked out good. That's all I want. I want to have the odds in our favor. Multiple indicators, multiple things, not a random trade. I want either a divergence. And these divergences were very, very shallow because of the weakness in the market. But if you looked closely, you can see kind of a slight angle to the low and then the lower low. And then the kind of reversal. And these had to be taken off very quickly. And again, the tool to do this is using your first rotation on your 9-3. Rotate it up. Sometimes it'll rotate up and you'll get so this went to 90 to 10. It went 20 points on that rotation basically. This rotation went from 10 to 20, maybe went 10 points before we got the rotation overbought. So, different. You'll see this. This is a great hidden thing. I mean, I'll take credit for kind of putting this together and having an understanding of why we want to get out at this first rotation. It just works so much better than anything else. I mean, it is about being a market piker. It's a boring type of trade, but it's such a safe trade. And if you get into the habit of finding that divergence and getting out no matter what the market gives you, you're going to get yourself out of a lot of trouble before you get into it. All right, you're not going to say, because sure, you could be looking at this and saying, "Oh, this is going to break out. We're overdue." But you know what? Trust in this. Trust in this on your first. And again, it should be multiple contracts. The reason why is because if you get a divergence, most likely you're going to get the move in your direction. When you get to the overbought, when you get your first profit or first attack of the 80, when the stochastic rotate back up to the 80, when you get that, you should take off. Say you hold 3 contracts, maybe take off 2, and then have 1. Then you move your stop up to your break-even area, wherever you took your entry. So if you had the divergence, you got in here, and then you got out here, you move your stop here. That way you're not losing anything. And if it does continue to move higher, you're sitting pretty, all right? So you got just a couple easy rules there, a couple easy rules to pay attention to. I'm already going into some of I can't wait to do the webinar. I think you're really going to enjoy it, and there's a lot to be said. Let me see. There is a little chart here. Oops, not that one. Oh, here's my here's a Ninja Trader, Apex Futures, Infinity Futures. There's some good ones for you. I didn't know I had those written down somewhere. Some of my rules here on the divergence rule. Stop 1 tick under divergence low. Profit first rotation. Sorry about that. I have it on the 14.3, but I tend to use the 9.3. I'll probably correct that and make that the 9.3 instead. The 14.3 and the 9.3 are very similar, but the 9.3 in this environment works better, I believe. Second profit, again, if we are in a good position and you start to see that the stochastic start to rotate up on the 60-10, you're probably going to get a bigger move. So this was a 5-minute divergence. I believe that 5-minute divergence showed up on the rock bot also. And then you had your rotation, which is probably going to give you a little bit more move. And this was going into the close. So there was a lot of cross currents, imbalances, margin calls, just settling out stuff. So, but it did have that nice. Normally, if this would happen around 11:30 or something like this, you start to get that rotation. You could probably even look for something else. But this is a very tough time to trade in the last 10, 15, 20 minutes of the day. It's just very difficult. But sometimes you get the best signals at those levels. You get the best signals in the morning, and usually in that 10, I call it the 9:50 to 10:30 zone, is usually where we see those bottoms. And then usually in the end of the day, we start to see it. But once you get, we've seen them other times. All we're looking for is a few good trades. And all we have is patience to wait for those. So there wasn't many divergences here. There was a couple, and they were very shallow. And that typically happens when there is extreme weakness. Wow, I just had a video meltdown there. I'm going to have to go edit that. Anyway, let's go back a little here. This is how the market, again, we're going to just really take this by storm next week. The overnight, what's good about the futures also, the overnight, you have opportunities, especially going into 3 o'clock in the, and again, Eastern Standard Time at 3 o'clock in the morning is when the European markets open up. So we usually get a lot of activity coming in at 3. In this case, you can see the volume was really picking up here at 1 o'clock because of just the volatility that picked up in the market with the sell-off. So there was a lot, just a lot of opportunities even overnight in this environment. There was probably a huge 5-minute here. Let's see if we see anything here. And what I'm looking for is, I'm just looking here, I'm scanning for this type of look, and then I'll go up to the chart and I said, oh, look at that. Look at that. That's a perfect ideal divergence with a reversal candle. I mean, that happened at 2 o'clock in the morning. I wasn't up for that. But, the rock bot or one of the indicators, or if you're watching the show, you probably get alerted to something like this. Or, you could see it on the charts if you know what you're looking for. So that was a really, really good. If that was up at 2 o'clock, there was no doubt I would have taken that. You put your, and that was right off the VWAP too, and you would put your stop right in there, and you would go with the run here. And what you would do is you'd probably take profits right up in this trend line right there, and then keep a break-even stop wherever you got in on this. Even if you got in late, say here, you put your break-even stop in there, and you got to further move up, and you want to follow that up with a break-even stop. Then you want to continue to move it up. And it really depends on how you want to do that. Sometimes people like to use the 20-period moving average as a method if you start to see something trending, or the 50. So I typically like to use those. If we start to see a breakout and we're starting to hold above that 50, becomes a good level to put your stop, or just kind of manage your stop around the 50. I don't know if your platform is able to do that, but that's what I would do. Sometimes you could even put a trend line in there. So good trade opportunity there. Just go back, and I see a little. I'm just looking for that little dip here, and then I'll check the market and see if it actually kind of lines up. And yeah, that was a little divergence here, and it, again, if you did put your stop underneath that low, you did get a nice little move into an overbought level right here, as you can see, and that would have brought you right up to here, and you would have had a pretty decent trade there again. And there's certain things you're going to be watching for, and how these things set up, and why there's only one single line. Oh, look at this. See that? Just a little. I know exactly what to look for, and when you see them, and you understand the rules of them. This is a definite one, a little pop back up above the 20 line. So first stage, and I'll show you that real fast. I'll kind of end the video on this. It was just kind of let you know, hey, we got big things coming here at Day Trading Radio. So I'll see you guys in the market. But let me see if I know my market just kind of crashed on me before. I hope I don't crash it again. We talked about the divergence. What we were just going to say here. I'm getting sidetracked here. I wanted just to go over that buy-side divergence entry criteria here. Stage 1, again, has to make a low under 20. So your price is coming down, you're making a low, and your stochastics are under that 20 bar. You have 2 bars usually on your stochastics. The 20 and 80 represents overbought and oversold, but that's not what we use them for. For the divergence setup, you want a pretty quick move back. We want to get that bounce. When that first bounce brings us back over the 20, and then a quick move lower, but it holds above the 20. That's the ideal divergence. And mathematically, divergence is going to happen if the price goes lower and the stochastics go higher. But I like to talk about the angle here. The stochastic angle from the low to the higher low, the degrees here. You see there's a little degree angle here. And sometimes you have a very shallow one that's under 10%, and I love them above. I think I usually, like to see them around 20 or above. I think 10% is good, but the steeper the angle, and the better the trade. So that's very, very important, and that's kind of a hidden secret. If you can keep that in mind, lots of times you won't even see the divergence. You'll see the stock come down, but the stochastics stay strong, and you don't even see that little pullback. That means the angle is so steep. That's great. Another trick of the trade here is that you want to get you want to have this same setup on the 14.3, and then the last thing we want to do is we want to have the 5-minute setup at least oversold and starting to come up off of that oversold level. It gives us a better longer-term trend. Now, again, this was a tough market to trade to the upside, but there was opportunities. I tend to just trade divergences like this, and I think it's just about working on your discipline. If you work on your discipline, understand the rules, you could pull off a pretty good amount of money each day. Again, it does require focus, and it requires discipline, and it requires a little knowledge. Hope this video helped you a bit. Stay tuned for a great webinar next week. At one point, I got it all set up. You saw parts of it now. You can sign up here at DayTraderRadio.com for a membership. Don't forget also support the site by clicking the like button and the subscribe button on the YouTube video. Leave a comment if you need any help. I'm always here to help. I might be slow getting back to you, but I will get back to you. And that's about it. Have a great evening.